Hi everyone, welcome to Tuesday, and of course every Tuesday we take a look at the performance of the New Zealand Stock Exchange, the main board being the NZX50. If you're looking for personalised financial advice, then you do need to go and talk to your own financial advisor. You've come to the wrong channel if you're looking for that. This is just my take on the market and how it's performed over the last week, and hopefully some education in that for you as well around share trading, share investing. So let's take a look. Right, up here on the screen you can see I've got the S&P NZX50, and like I just said, it's the top 50 companies trading on the New Zealand Stock Exchange. Now I'll just move that along a bit, and if I zoom in, you can see we had a very good positive week last week, which is really exciting. And you can see with the dashed line, and that is where the market is trading today. I'm recording this and it's about 11:45 on Monday. The market on here is delayed by about 20 odd minutes, but that's still okay. So the market's down about $35.38 so far for today. Now, that's nothing to be concerned about. And for those of you that do watch the market, just as a little offshoot, I have found in my own research over the years that our market does tend to fall around sort of midday to 12:30. Our market does fall, and that tends to coincide with when the Australian market opens. Now, whether it's got something to do with the fact that a number of our companies are dual listed on the Australian Stock Exchange, I really don't know. But that is something I have observed over the years. So that could be because we're getting close to their opening, that it could be having that spin-off, who knows, but it's nothing to be concerned about. You can see by this dashed line here, that is where the market is currently. And you can see, which is, it's just down a little bit from where we closed on Friday, but that is looking like pretty much a line of resistance. So if our market can break through that line of resistance, then that can be quite a positive indicator in that it can potentially keep going, which is what we want to see. Let's go on to the daily charts and just see all daily candles and see how that's been performing as well. And yes, if I just hover on that cursor, we closed on Friday at about 13,223. We'll just move that up. There you can see with the black line, the last time we actually hit that was back in around December 2024, January last year. So it's been a long time coming to get to that point. Let's just put our moving averages on and we'll just see how they compare as well. So we'll start off with the 30 exponential moving average. Here we go. And as you can see, the market is trading above that one, which is a very good sign. And I'm not just on the daily chart at the moment. And we will also pop on the 15. So this becomes a 15-day moving average. Right, there we go. So it's trading above both of those, which is very, very good. Something I want to point out, and it's a little bit hard to see because the screens, here we go, I've just zoomed it in a bit here. You can see on Thursday, that would be there. It was a positive day, which was great, but look at that volume candle. That volume candle is up, and that's what we want to see, that when we are having positive days, that the volume is expanding. And the day before, which would have been Wednesday, you can see that that volume candle was a lot less. It had contracted a bit. And that's what we want to see. When we have down days, we want to see that the volume is contracting, and we want to see the volume expanding when the market has positive days. So that is a good indicator at this stage. Let's just go back to the 5-year chart and take a look there. And again, you can see that the market is trading above both of those 15-week and 30-week moving average, which is great. It's following fairly closely to both of them. And again, to me, that's a good positive indicator. If I look down here to the volume, you can see that, yes, we are starting to get a little bit more volume coming through on our market. I'd love to think that it is going to come into something of strength, but only time will actually tell us that. Now, I have been starting to look for new opportunities in the New Zealand market, and we'll obviously monitor those and see how they go, which is great. It's been quite a while. I have done a little bit of purchases probably in the last few months, but there hasn't been a lot of opportunities in the New Zealand market for the bulk of this year, to be honest. But like I said, there is a couple of opportunities that have popped up when I've sort of done my scans and research over the weekend. So we'll look at entering those and see how they go. Let's take our moving averages off. And we will also take a comparison with this. And we want to see how the main board has been comparing against the equal weight portfolio, or the equal weight index. So that is FNZ.NZ, there it is there. So again, it's the top 50 companies on our stock exchange, but it actually has a cap or top exposure, if you like, of only 5% to some of those top companies, rather than weighting it to exactly how the index is. So it means the likes of your Sparks would only have about a 5% exposure, whereas it is a lot more dominant than that at the moment. And like you would expect, it is sort of following the market, but it is a laggard. So what that means is that it's not all of the top 50 companies, or even the majority of them, that are giving us the performance that we're starting to see in our main board. You've really only got a handful. When you see a lot more participation through a lot more companies, if I look back through this period here, you can see that blue line is trading above the main board, and that means that there's a lot more participation in the overall 50 companies. There'll always be laggards, of course, but there's a lot more participating and driving a market up than what we've currently got, because you can see that that blue line is trading underneath. I'll take that off. Now, the other thing that I like to look at as well is just to see how much volatility there is in the market. And I simply do that by taking this ATR line. So that's the average trading range, and it's over the last 21 weeks. And you can see there it's at about 262. If I divide that by the current price of the market, that will give me how much volatility there is in the market. And it's just under 2% at the moment. It's about 1.98. So the volatility is very low, which is a good indicator. When it starts to get above that 5% mark, you can potentially have a lot of whips soaring around. And again, I definitely don't want to be in a market when that's happening. But at the moment, this is a good sign. The only other thing that we probably just have a glance over is the RSI down the bottom here. And that just gives us an indication as to whether the market is overbought or oversold. In my example, it's set on 80 for overbought or 20 for oversold. And you can see it's trading up at around that 66 level. And this is just over a 10-week period. It's neutral, really, as to whether it's overbought or oversold. It's trending up, but it's certainly not in that aggressive buying stage, which, if it was, could potentially mean that the market's going to rally further. But it's not there at the moment. But it doesn't mean that, no, it can't continue. The only thing I would look for is, if I flick back to the daily chart, if I look at that RSI indicator, you can see that it's starting to trend down. That could be a potential negative, but only time will tell. There's nothing wrong at this stage, I believe, in dipping your toe in the water, making sure that when you do buy shares, you know exactly what your exit strategy is going to be. And in fact, someone was talking to me just last week. They'd gone and bought a share. It had already rallied. It was on the US market. It had already rallied. Not sure how much they'd put in. They were quite excited that they'd made $400 in a few days. That's fantastic. The only thing I would say is just know where you're going to exit a share. If you follow me regularly, I certainly do not pick tops and bottoms. I use a multiple of the average true range. For me, I take that, I times that by 4 for the New Zealand market, and whatever the price is, take the ATR off times 4, and that's where my trailing stop will be. So if the market keeps moving up, I naturally move my trailing stop up as well. So what that does is it means that it's not going to get me out at the top of a market, but it certainly won't mean that I will ride my share all the way back down again, which a lot of people do. They have all that excitement and euphoria because, hey, I've picked a winner, that's great. But then quite often they ride them all the way back down again because they've never considered where an exit strategy potentially could be. So anyway, we'll stop sharing. I hope that's helped. I have had a request come in for A2 milk, so we'll take a look at A2 milk on Thursday. And remember, if there is anything you would like to learn in the share markets, by all means, reach out, let me know. Happy to do a video on that for you. And also, if there's a share that you would like me to review for you, again, happy to do that as well. I try to read all the comments and try to respond to them, so it might take me a few days to do that, but I love your comments, I love your feedback, and I love to be able to make these to help you in your share trading journey. So until Thursday, take care.